Welcome back to Closing Bell on the 7th of December, Monday. Today I'll be focusing on 4 key stocks as requested by many of you on my channel. So the first one, I will always speak about Tesla first. So Tesla almost hitting 650. I was predicting it to hit 650 just before the 18th December, but it's prematurely hit. So well done everybody who Tesla. So just a bit of heads of warning that Tesla, people this Friday or perhaps next Friday, people are lining up to take some profits. No one's selling Tesla, no one's dumping, but people are taking profits. So short sellers are out there to also perhaps take some leverage to try to short Tesla. So there might be a bit of a wobbly effect on Tesla, but up to the 18, it should be on a good steady trend up to 650, 660, 700. So loads of people are getting excited about it. But on eToro, I've took some profit off Tesla because eToro for me, Tesla is it's overgrowing. I have to take some. I have to protect my yield on my account to keep my global growth fund management yield up. So I've taken some profit. Am I perhaps to go into Moderna stock because the vaccine is the hot topic of the town just now. So I took some profit, but I'm still majority hold is still Tesla. So if you want to join me on eToro, please click on the link below. I have a partnership with eToro and it helps me showcase my portfolio, and also I just want to spread the good word on how good of a platform eToro is. It not just helps me showcase my work, but also I'm learning of other people on eToro. Next one, I want to speak about the incredible Palantir. My goodness, 21% today and 3% after hours. Palantir is sitting about 30 bucks just now. Palantir is incredible. It dipped all the way to 22, testing the waters at 18. Nope, it came back up through 25 and now through the ceiling at 28. Now hitting 30, and the next ceiling that they will be testing all-time high at 35. And my take on this, I think Palantir eventually will hit 40 before it decides to go further up or down the way. So lots of institution investing, lots of retail investing, lots of people going in fear of messing up or joining in the bandwagon. When I look at a technical spec, the stochastic has just done a turn, so it's still a long way to go before it actually goes oversold. RSI is at 72, it's still a long way up to 83. So if you want to take a punt at Palantir, I think you hit 40 either right after New Year or before Christmas, but I think most likely give it a few more weeks. I think the momentum is strong, it might go beyond and hit 40. And for me, Palantir has grown a bit overbought, so if you hit 40, I might perhaps take profit, take some nice profit and see what happens after that. So that's me for Palantir. It's good momentum, it's a good turnaround, and there you go, it's going on the upwards. So the next one is a request from a viewer on my channel. I think a couple of people clicked like, so I need to focus on Uber. Yes, Uber to me, just to summarize, is a great recovery, disruptive technological stock. It's a big mouthful. If you check the charts for Q2 and Q3, that's a good turnaround. They're starting to recover. So where people are coming from is Uber has done really well with the delivery business, Uber Eats. So investors are thinking, if Uber Eats stay the way they are, because nobody's going to restaurants, and besides half the restaurants are closed anyway, and then we've got all the taxis coming back, not as much, but then you will present a good standpoint in the next 12 months after everything recovers. So we might be looking at Uber making about 25 to 30 billion revenue. They might be generating all-time high revenue in the next 2 to 3 quarter earnings. So if we present it that way, if you look at it that way, Uber may potentially hit 60 bucks a share. So that's where the skyline is for Uber, the ceiling that people are looking at where Uber recovers in the next 12 months. We're talking about 2, 3, 4 more quarters. But for now, should you buy Uber? That's a key question. I would say, wait, hang on. I've got a few reasons why Uber might dip to 42 to retest that line. 42 to 45 if you want to if you don't want to miss out. 42 to 45. So why would Uber drop? So the one, they sold the Aurora self-driving business. That's what made Uber special to be self-driving in 2022, 23, but all that's gone, they've sold Aurora. So that's reason number one. And reason number two is DoorDash will be coming IPO in the next couple of days. So when the DoorDash arrival comes to IPO on the delivery food business, you will see Uber do a bit of a dip. So potentially you could see Uber dip 5-6%, potentially might retest that floors again. So grab it on the dip on Uber. Do not lose this opportunity. That's all I can share with you. And finally, I want to speak about Virgin Galactic, SPCE, Richard Branson's company. Space travel or hyperspeed travel or whatever you call it. There's a reason why it's jumped up great to 32 bucks today, testing all-time high. There's a reason why people are excited about the prospect of Virgin Galactic. who is $7 billion now. If you're 19 to 25 or 30-year-old, you have got a long time to go, a long life ahead of you, very fruitful life ahead of you. You know, Virgin Galactic might not be making money in the next 5 years, maybe 6, maybe 20, 30. But if they do start making money, high profit margin, they might hit the $100 billion mark if they fend off all the competition. Everything needs to go good for them until 2030. So you might see that's why people like it. There's a potential of 10x in there. Things you need to know is there's no growth, there's no sales revenue, there's no future root proof of their roadmap. They're still trying, they're still gaining, but they're good at getting money for investors. They're good at raising cash. And also one thing that I think that's good, and when they're sitting at 32 bucks, is the losses are not that bad. Yes, losses. 70 million per quarter times 4, 280 million per year losses on this testing before they actually produce something. So it might grow, but they're quite controlling the losses quite well. Because why I say that, when Uber first IPO, they lost $1 billion per quarter. I repeat, $1 billion per quarter, and these guys at Virgin Galactic are only losing about 300 million per year. So they're controlling the cost, and see what happens when they start mass producing their planes. So there's something to look about. So all I can say is, I think at the rate they're going, at the way they push, if they do break even at one point, pushing revenue and sales, I think they should be looking about $50 to $60 per share. So Virgin Galactic will be super volatile. You can go up to 40 and drop to 30 in the next few days. So be aware. And it's one of the stocks I would buy long term, but at the same time leave half of them to swing it. If you go really high, just buy and then sell and then wait for it to come back down. It's a stock that you can hold long term and also swing at the same time. If you are young, you can afford the risk, why not do it? That's what I think. So this is me for Virgin Galactic. I mean, if you are, it's good for long-term investors, for young folks between 19 to 30 and looking beyond 2030. But for the likes of me, who's looking at 2025 and 2030, because it's a time where I potentially might retire, Virgin Galactic is not for me. I'm looking at elsewhere for a bit more stability. So this is me for Closing Bell. I hope you do like. Please click like and subscribe, and hopefully to see you tomorrow for more Closing Bell. Take care.